Well, after the break, I'll be joined by an expert on precious metals who sees a lot of green in one yellow metal, gold. He's Jeff Nichols, and he thinks it could go as high as $3,000 in the next few years. We'll talk to him when Bloomberg's Bottom Line continues in just a moment. Gold declined for a second day in New York as a stronger dollar curbed demand for the metal as an alternative investment. But our next guest has high hopes for the commodity. Jeff Nichols, economic advisor with Rosalind Capital, has over 25 years experience in precious metals. He joins me now. Jeff, welcome back to Bloomberg. Good to see you.
Good to be here.
You see gold rising to around $1,500 by the end of the year and to $2,000 to $3,000 in the next few years. Why?
I think gold has a number of fundamentals that are very positive. I mean, not only do we have monetary policy prospects here in the U.S. being very expansionary with QE2 and probably QE3 and 4 in the next few years, but we have overseas central banks buying gold. China, India, Russia, among the big names. South Korea last week announced that it was considering buying gold. All of this is very positive, and it's following what's happening in the private sector overseas. Sure. The Chinese, the Indians, across Asia, people are buying gold both as jewelry and as an investment, and that's likely to continue and accelerate.
Are downside risks limited here?
I think downside risks are very limited. And even if gold should fall another $10 or $20 or $30, I think it just provides a better entry point for the long term.
You mentioned India, and there's a couple of things at play in India why you believe that gold there, we may see the Indians buying a lot of gold. What are they?
Well, first of all, over the next few years, there's going to be continued good growth in GDP and personal incomes. And India has a long historic and cultural tradition of investing and saving in gold. If people have more money, some of that will trickle into the gold market, and there are so many people that it adds up to a lot of gold. So that's number one. Number two, the gold investment infrastructure, as I call it, is also advancing in India. We've had the introduction of a gold ETF. We have the Postal Service now selling little gold medallions in the rural agrarian communities that have a hunger for gold but don't have an easy way to buy it.
And a couple of countries you don't usually hear a lot about when you're talking about gold, Vietnam and Thailand. What's happening there?
Well, Vietnam and Thailand are both historically big countries for gold. The people in these countries for decades have been, or even longer, have been big gold buyers. And lately we've seen a step up of gold buying in those countries. We've had Thailand, the central bank, buying a substantial quantity of gold just a few months ago. And in Vietnam, the regulations that govern the gold market have been eased up a bit in recent weeks. So that's very prospective.
What does this bullishness in gold mean for the U.S. dollar?
I think it's more a reflection than a cause for what's happening to the U.S. dollar.
Okay.
To some extent, gold's advance is the mirror image of a decline in the dollar. So certainly some of the price today has the past devaluation and the prospective, what's expected for the dollar, already built into it.
And Jeff, are we seeing a downward correction right now?
We are. Gold is off about 10% from its recent historical high a few weeks ago.
But still up 20% this year, right?
Still up 20% this year. And I think by the end of the year it'll be up substantially more.
All right, Jeff Nichols, Rosalind, thank you so much for coming in. Always good to see you. It's been a while, too long. Thank you so much for coming in.
See you again soon, I hope.
You too. Stay with us. Looking to get some Christmas shopping done on your phone? We'll have details next.